Let's continue the conversation this morning with Julian Emanuel, Senior Managing Director at Evercore ISI, who joins us here at Post 9. Jay, it's always good to see you. Welcome.
Good morning.
You still have 7750, right, year end?
Absolutely.
Any reason that any of the topics we just talked about are going to get in the way?
This is one of these times where, first of all, if you think about it, at the end of the year, the markets ended on a quiet, sort of uneven tone, but essentially people de-risked. Volatility is very low, and now we're in the second week, and it's already felt like a year in terms of the news flow. But the fact is that the underlying trend of better earnings and stimulus, and yes, there will be more Fed rate cuts. We think there could be 3 versus the market's expectation of 2. All of that is going to support markets higher. This is one of these times that because of the news tape, the market should feel a little bit more uncertain. The biggest issue for us as we look at the year is a lack of fear if there's too much complacency. And we kind of like to see a little bit of uncertainty here. That's going to prop.
Is your bull case anywhere approaching 9 still?
We still think if you look at the backdrop, and this is another fascinating aspect about the end of the year, the uncertainty around technology and the AI trade specifically has intensified. People are cautious about it for all the things that we saw, concerns about CapEx, concerns about adoption. We actually think this is the year where corporate America has to prove to everyone that why and how they're driving revenue and cutting costs by using AI. Otherwise, they're going to be judged as being competitively disadvantaged, and that's the kind of environment where you could get a potential AI bubble to 9,000.
I'm all worked up about the Fed investigation, but normally I'd be talking about the CPI report, which I think was another surprisingly weak report, or weak in a good way, which is core CPI coming in on a monthly basis and yearly basis less than expected. Usually the market would be celebrating that. It's not.
Well, and again, remember, we just made a new all-time high yesterday. It's been a very strong run.
Still, expectations were that this was going to be a hot print. Core CPI at 2.6%.
And I would say this as well, Sarah. There's still some residual questions around the information and the data itself. I think that's going to take another several months. But the underlying fact is that, again, when you think of the long term, inflation is moving the right way, and growth, I mean, the Atlanta Fed GDP is now is 5.1%. We probably don't want to be cutting rates just yet in that backdrop, and I think that's why the market doesn't think you're going to see one until June.